Opendoor stock just keeps surprising the market, and today might be one of its most telling days yet. We're heading toward Wednesday's market close, and the stock is trading around $9.10 per share, up about 7% on a day when broader markets are red across the board. That's not noise. That's not luck. That's strength. And in this environment, strength means belief. Belief that the company's story is finally starting to turn. Let's unpack what's happening here, because there's a clear pattern emerging. A few weeks ago, Opendoor announced that shareholders of record as of November 18th will receive a dividend of tradable warrants. For every 30 shares you hold, you'll get 3 different warrants: the Series K with a $9 strike, the Series A with a $13 strike, and the Series Z with a $17 strike. These are real, tradable securities that give holders leveraged upside if the stock performs. And they're being distributed to everyone who owns the stock before the record date. Now, that announcement set the stage for something we're seeing play out in real time. People don't want to miss out. These warrants are like a bonus lottery ticket for long-term holders, and that dynamic has turned the normal supply and demand picture upside down. Instead of people trying to short the stock, more and more traders are trying to own it heading into November 18th. And that creates pressure on shorts, pressure on borrowed shares, and pressure on the narrative that Opendoor's best days are behind it. Here's what's even more interesting. The short interest in this stock remains high, roughly 21% of the float. That's a massive overhang in normal circumstances. But when a company announces a corporate action like a warrant dividend, short sellers are in a bind. If they hold their positions through the record date, they owe the value of those warrants to the lenders whose shares they borrowed. In other words, they have to pay for a dividend on stock they don't even own. The only way to avoid that cost is to close the short, to buy shares back. So you can see how the setup here is building towards something that feels a lot like a short squeeze in slow motion. And that's exactly what today's price action looks like. The stock's up again while markets are down. That tells you buyers aren't waiting for confirmation, they're positioning early. They see the same thing we're talking about. They see the warrant record date on the horizon. They see the relative strength. They see the CEO, Kaz Nejatian, publicly stating that he intends to buy $1 million worth of stock at market open this week, the first chance his legally had since becoming CEO. And they see the same momentum that people like Eric Jackson have been talking about for months. Let's talk about that for a moment. Eric Jackson's $82 thesis. For those unfamiliar, Jackson has been one of the most vocal defenders of Opendoor on social media. He's spent over 80 days campaigning publicly for the company, even staging what he calls Camp Opendoor outside of Drake's in Toronto. To most observers, it looks eccentric. But to those who followed him closely, it's clear that his commitment comes from deep conviction in the fundamentals, that Opendoor is a misunderstood technology platform sitting at the center of one of the world's largest industries. He's been consistent in saying the media doesn't understand what's really happening, that analysts are looking at the company through the wrong lens. And his $82 target, whether it happens this year or not, represents that broader vision of what Opendoor could become if it executes its plan and if the market re-rates it like a true technology company rather than a distressed real estate play. And what's remarkable is that some of that optimism is finally showing up in the tape. Jackson's core argument has always been that Opendoor is not a flipper of homes, it's a data-driven liquidity provider. A company that applies algorithmic pricing and automation to an industry that has barely changed in a century. When interest rates eventually fall, and when housing liquidity returns, Opendoor doesn't just rebound, it scales. Every percentage point increase in market turnover translates into exponential improvement in volumes. The business model becomes dramatically more efficient, and margins expand. That's the long game, and that's why this recent macro data matters so much. Because alongside the company-specific catalysts, we've also had softer jobs data and growing market expectations for Federal Reserve rate cuts. For most stocks, that's a tailwind. But for Opendoor, it's the wind at their back. Lower mortgage rates mean more buyers. More buyers mean more sellers. And more transactions mean more opportunities for Opendoor to deploy its technology and capture spread. The entire system works better when liquidity flows. So when you see the stock up 20% Monday, up another 4 or 5% Tuesday, and now up 7% Wednesday, that's not random volatility. That's the market pricing in what a more favorable macro environment means for a company that's built to scale with it. So let's step back. What do we really have here? We have a leadership team that's aligned with shareholders, literally structuring compensation and dividends to match shareholder outcomes. We have a CEO who's willing to put his own money on the line. We have a growing retail base that believes in the vision. We have a macro environment that's slowly turning supportive. And we have one of the most asymmetric setups in the market, where short sellers are caught between an approaching record date and a rising share price. When you put all of that together, it's not hard to see why Eric Jackson's $82 thesis, which once sounded outrageous, doesn't seem so far-fetched anymore. Because at its core, his thesis isn't about timing. It's about trajectory. It's about what happens when execution meets belief. He's argued all along that when the story finally shifts, it would shift fast, and it would catch the doubters off guard. And that's exactly what this price action feels like. The tone of the market around Opendoor has changed. A few weeks ago, analysts were still dismissive, focused on short-term profitability. Now, they're starting to talk about strategic optionality, about how the company is transforming the customer experience, and how its data advantage could compound as the housing market normalizes. That shift in tone always precedes a shift in valuation. The stock market is forward-looking, and right now it's starting to look forward again on Opendoor. If you're making a video as we approach the close today, the key message is simple: Opendoor is defying gravity. It's not just following the market, it's leading it. And the setup into mid-November is one of the most compelling on the board. Between the warrant dividend, the CEO's personal confidence, the short interest dynamic, and the macro backdrop, the ingredients for a powerful continuation rally are all there. Of course, nothing goes up in a straight line. There will be pullbacks. There will be profit-taking. But the deeper trend seems clear. Belief is coming back to Opendoor. And once that belief returns, the stock doesn't need the media to validate it. The price action will do that on its own. As we wrap up the week, keep an eye on how the stock behaves around the $9 mark. If it consolidates and builds support there, that's a strong base heading into the record date window. If volume continues to climb and the stock starts closing above 9 consistently, the next leg higher could happen faster than people expect. Because at that point, the psychology shifts from disbelief to acceptance, from this can't be real to maybe Eric Jackson was onto something after all. That's the story tonight, a company that's turning skepticism into momentum, fear into conviction, and volatility into opportunity. Opendoor is doing what great turnaround stories always do. It's forcing people to look again. And for long-term believers, that's exactly where the comeback begins.